Well, thank you very much. It's wonderful having you here. It's a much more exclusive session than the previous session. This is clearly for the fine fleur, the people who really want to get to the bottom of stablecoin and what we seek to achieve, what we can achieve, what the benefits are, and what the risks are. I am your moderator of this session this afternoon. I'm delighted to be that, given the very knowledgeable panel we have. And what I'd like to do is to organize it as follows. I will ask each of the presenters, the panel members, to summarize in 5 minutes max their story. What is their vision on stablecoins? What is their vision on the benefits, on the risks, and how we move forwards? Then we will have 2 rounds of debate around 2 themes. The first theme will be on the question of on why and what. And so the drivers, the vision, the institutions, the philosophy behind the new stablecoin payment structures. And then we'll have a second theme around the question of how, and that will be more technical. What is a stablecoin? What are the technicalities? What are the specific risks? And how can you deal with those risks? And then I will end the panel, and I will ask each panel member in maximum 30 seconds to give you their take-home message from the debate. If they're very quiet and they don't generate their own discussion, I will walk into and ask you to give them the questions. But I think it should generate its own dynamics. The interesting thing is, when I was here last year, it was all about Bitcoin. I can remember Bitcoin was the term that was, and now we're talking about Libra. So it just goes to show how quickly things are changing. I think the problem with Bitcoin is it was very volatile. It didn't really fulfill some of the basic functions that you want of money. It wasn't stable. It wasn't a good store of value. So the answer came up from within the private sector, and that is stablecoins, which does fulfill, it gets closer to what society really wants of money. So that's just by way of introduction. I think we debated just before lunch on how to structure this, and I must say it was complex. So when we debated it, there were so many perspectives. So I hope this will provide something of a structure, and that we can give you something of a framework by which to think of the stablecoin moving forwards. So I will introduce now all 6 speakers very shortly, and then I'll do it and I'll give them the word in the order in which I will now say who they are. The first speaker will be Tommaso Mancini Grifoli, and he is a Deputy Division Chief of the Monetary and Capital Markets Department at the IMF. And he has a past also in central banking. You worked at the Swiss Central Bank, so a very reputable person. He has recently written a paper also on the taxonomy of money, and so he can give us some initial structure on how to think of this. Then we'll move to Daniel Heller. Daniel is Head of Regulatory Affairs at Finality International. And, but you have a very esteemed past as well, I know, in the public policy circles. We met in Basel previously. I think you worked at the IMF previously, as I did in the distant past, and you worked at the Swiss National Bank as well. So we have a strong contingent of monetary expertise. We also have 2 people more from the academic side, so the deep research thinking. Olena Havrylchyk will be the first speaker from that perspective. She's professor of economics here at the Sorbonne, but she's also a consultant at the OECD, and she's published very broadly in on financial matters. The second research-oriented or more research-focused person is Garrick Hilleman. He is head of research at blockchain, but you're also an associate researcher at the London School of Economics, and we're really happy to have you here as well. And then we'll move more to the practitioners, so the people who are actually in the trenches doing the real thing, and they will tell us that we have seen it totally wrongly or not, but we'll hear. And the first will be Samuel Lim here to my left. He is a Chief Compliance Officer at Binance, but I think more importantly, he has already launched 2 stable coins in the recent past. So this is the sort of person you really need on a panel like this to get the practical perspective. And finally, we have Stephen Becker. He is President and COO at MakerDeal DAO on the Ethereum blockchain. So that's he is planning to be so good at his job that he will make himself superfluous, and that the whole system will run without you within a year or 2, I heard you say earlier. So that is wonderful. If we can all do this, we can have long holidays. So let me, without further ado, Tommaso, can I give you the floor?
Thank you very much. So I'm supposed to speak a little bit about what are stable coins. So perhaps we can think about what do you need to make payments, and obviously what you need is a stable store of value. You need it because you need to know how much money you have in your pocket relative to the goods you want to purchase. And the merchant will need a stable store of value because he or she wants to know how much money they have in their pocket relative to the price they set for the good. Crypto assets, as Arendt was just suggesting, had a lot of advantages, but clearly were not a stable store of value. So they didn't serve the purpose for a good means of payment. Maybe a purpose for a speculative investment, but not a good means of payment. So, but they still had advantages. They were safe because of the DLT technology. Costs of transactions were low. They had a global reach. It was easy to send them across borders. They were trusted, and in some countries, perhaps not France, perhaps not the US where I live, but in some countries had benefited from more trust than there is in the local banks. And they offered an open architecture so that the product could be built upon, complemented. Clearly, they were also more usable, better integrated into our digital lives. So how do you maintain these advantages while satisfying the need for a stable store of value? And that's where stable coins come in. Essentially, a coin with a balance sheet. Banks have balance sheets. That's what they use to ensure your trust in the stability of value of their liabilities, the deposits that you hold. But they don't do it alone. Governments play an important role. The government backstop of that stability is fundamental. The deposit insurance, the lender of last resort, liquidity assistance, etc. Stable coins have to do it by themselves. So they need a different type of balance sheet. And essentially, stable coins are a coin with a balance sheet, a coin that is backed by assets. And then we can think about how is it backed. Different assets can be used, more or less liquid, more or less risky. The backing can be up to different extents. There can be different contracts, I'll be more clear about what this means, that are written between the issuer and the user of the coin, and different pledges that are made in terms of redeemability. So the safest type of coin will be backed one-for-one for fiat currency. The backing will be full, so the coin will have a face value denominated in fiat currency, so, backed 100% by that fiat currency. There will be a claim of the user on the underlying asset, and a redemption guarantee to be able to exchange that coin back for fiat currency. That's the safest type of stablecoin. But it's important to understand that there's a whole spectrum, really, of stablecoins that differ in terms of the assets that back them, the degree of backing, the contracts that are written, whether there's a claim on the underlying assets or not, and what the promise is. Is there a pledge for redemption or not? Therefore, because of this spectrum, there is also a spectrum of riskiness of those stablecoins. So not all stablecoins satisfy the requirement of a stable store of value, which is what we started out by saying is important. There's also this brings up a very, very important and complicated regulatory discussion, which we were just discussing earlier, is what are these animals? Are they a security? Are they e-money? Are they a payment system? Are they an investment vehicle, et cetera, et cetera? We need to define what separates each of these classes of assets, of money, from a regulatory standpoint. 1 minute just to discuss adoption. So are these stable coins going to take off or not? I think we can think about how good are they as a stable store of value and how good are they as a means of payment? How attractive are they as a means of payment? And I think the bottom line to me is that they are less good than commercial bank liabilities as a store of value. More risky, and we'll get into the risks later, right, Arndt? But better as a means of payment. So the question really is, are they better enough so that they are adopted? And the follow-up question is, if they are adopted in a big way in the interim, while banks catch up to making their liabilities more attractive as a means of payment, if adoption spikes now, because of network externalities, will adoption persist once banks have caught up? Is there a sort of first mover advantage right now? Sort of hysteresis in adoption and the use of stablecoins? I think that's an important question for us policymakers to keep in mind. So I hope that gives you a bit of a perspective on what these things are. Thanks.
Thank you. Daniel.
Yes, thank you, Alt. It's a pleasure to be here. I would like to make, in these 5 minutes, touch up on 3 topics. The first one is that I do think that blockchain technology and DLT is extremely powerful, and here I'm talking about powerful for the financial sector. We will have most likely a lot of tokenized assets that can be traded 24/7 at very low costs in a transparent way. And if we have tokenized assets, we also need settlement, right? Because we will exchange ownership of these assets, and then we need money that is on chain as well. And this brings me to the second point. Here, I think stable coins are the only way to go, right? We have seen, and Tommaso mentioned it, Bitcoin is not a good settlement asset because it's simply too volatile. All the tokens that are very volatile, I don't think that they will be adequate to settle financial tokenized assets. So I think stable coins will be very important. The question is, but what are good stable coins? And here I think as we have enough economists here, we have to look at the history of currency crisis when we had pegs to an underlying currency. These pegs were credible for only when there were enough assets to hold up the peg, right? You could peg to the dollar, but the central bank needed to have enough assets to always cover the liabilities it had against the banking system. So you need enough assets, and here I will go a step further than you went, Tommaso. You don't only need to have enough, they need to be liquid, and they have to be in the highest quality. And the highest quality of assets would be central bank money, right? It's not fiat currency, where you can have a bond that defaults, you can have a bank that defaults. If it's central bank money, you can have a truly stable coin. And I think that's where hopefully the development is going. My last point is about regulation. I often hear and I read articles that say, you know, regulators don't know how to tackle stable coins. And now they have to work together. I would say that's not true. Central banks, and you have been there for a long time too, Art, for 30 years they have been working together to regulate payment systems, right? So that's nothing new. And if you look at what's out there, and I would encourage you to look at the stablecoin guidelines that the Swiss financial market authorities issued yesterday, there's really no surprise in there, right? They say you have to be regulated as a payment system. This means you have to comply with the principles for financial market infrastructure. You have to comply with AML, CFT regulation, and possibly there are more things, bank type of regulations, consumer protection, asset protection, and so on. But so I think from a regulatory point of view, we know what needs to be done.
Thank you very much. Thank you very much, Daniel. Olena.
Thank you very much. So I'm very happy to be here, and so I would like to touch on two issues. Something which has surprised me a lot when Libra has published its white paper is that it's proposed to introduce a new unit of account, so a global currency. And of course, we have many other stable coins which also introduce a new unit of account. And so, of course, there's a big question: do we need a global currency? And I'm going to speak as a monetary economist. And so, on the one hand, there are many researchers and experts who are saying, well, having a global currency could be counterproductive because in emerging economies they would have difficulty to implement their monetary policy. This would be a big loss. On the other hand, we live in the international monetary system, which is dominated by the US dollar. It was created during the Bretton Woods conference at the end of the World War II. And so US enjoys what's called exuberant privilege. It means that it enjoys higher return on its assets than it pays on its liabilities. But with this privilege comes also a duty. So the US has a moral duty to play an insurance role when the world is in trouble. And it has been doing it in the past, not always satisfactory to everyone. So in emerging countries, people were complaining. And so in a way, it could be a good reason maybe to have a global currency. So we wouldn't have this conflict of interest in the US between the domestic monetary policy and the financial stability in the rest of the world. We also know that we'll experience global financial cycles. And so again, there are, after the last financial crisis, there were some calls to create a global central bank with a global currency. There were calls from the People's Bank of China. There was even IMF, which written some technical paper with an idea to introduce a global central bank which would issue Bancora. Bancora, it's a reference to a global currency which was proposed by Keynes during the famous Bretton Woods conference, which was rejected. So you see that all those ideas to maybe we need a global currency, so Libra seems like maybe it's a good idea. The only difference is that when I talk about a global currency, I talk about a global currency with a global monetary policy. Whereas Libra wouldn't have a monetary policy, or maybe it would, we don't know, because it would have it would manage a portfolio of assets in which currencies, how it's going to decide. It might interfere with monetary policy, even though we are hearing it's not going to do it. So this is really one aspect of this global currency which Libra has produced, or other smaller currencies, smaller stable coins. Now the idea of a stable coin. Actually, when I think about the future of money, I have difficulty thinking about stable coins. For me, stable coin is something from the past. When you read history of money, you read about goldsmith banks in the UK, in England. A few centuries ago, you could bring your gold and you receive a banknote. So it's your first stable coin. And as time passed on, banks started to issue banknotes which were not backed by gold. And this is how we came up with with our modern banking system, which is a fractional reserve-based banking system. So if we imagine that all the payments are done in stable coins, in a way, that's the end of our modern banking system, the end of this credit-based, when banks can create money every time they issue a loan. So of course, the big question is, do we want to end this credit-based system? Did it serve us so bad, or do we need it? And who is going to be responsible for the monetary creation in the future? Because you see, in a way, today we have the private banks which create money, and we have a central bank which tries to stabilize this monetary creation. What's going to be in the future? Thank you.
Thank you very much, Olena. Garrick.
Great, thank you. Okay, great. So thank you very much. So I'm the head of research at blockchain.com. It's been around since 2011. Before blockchain became a buzzword, we had the name, so. But we were the first to publish a year ago a major empirical study of stablecoins. We also did a follow-up this year, the 2019 State of Stablecoins report. These are free to download from the blockchain.com website. And one of the key findings from the research was that there's lots of different types of stablecoins out there. We'll be talking about different designs. But the more complicated and, if you will, more decentralized the stablecoin is in its design, the less confidence there is in the stability mechanism. So that's an interesting kind of conundrum potentially for those who are looking to further decentralize stablecoins and maybe move to completely unbacked stablecoins. I'm sure we'll be talking more about Libra. Libra's goal, stated goal, is to be more decentralized. How can that be achieved when there's U.S. dollars, sterling, euros backing it? Over time, it'd be interesting to think about whether or not they would move away from that and actually make Libra completely unbacked. That's a possibility, and that to me would almost be a necessity for it to become fully decentralized to meet that stated objective. Libra is also in a very difficult position because, on the one hand, they're getting a lot of pressure. Facebook is to protect privacy, but that's very difficult to do while you're also policing for money laundering, and other activities. To really, I think, to have a fully decentralized, privacy-enhancing network, it has to be decentralized, and so there's a bit of a difficult situation there for Facebook. That's going to be interesting to see how they try to resolve that. One other thing I'll mention about stablecoins before I turn it over is that blockchain actually added a stablecoin to its wallet this year, Paxos. It's a U.S. dollar backed stablecoin. Part of our thinking is about choosing Paxos was that we wanted for our users the stablecoin that had the greatest chance of maintaining its stability to meeting that promise. And that's one thing stablecoins by and large have successfully accomplished, at least the US dollar backed ones. Tether is criticized a great deal, and it hasn't always been in the secondary market holding a one-to-one peg, but more or less it has remained stable, relatively speaking, for the 5 years that it's been in existence. And that's a pretty significant accomplishment. It also has incredible inertia. When there was news earlier this year that it wasn't fully backed, the size of Tether has doubled since then in terms of its market value. Users are very much wedded to Tether, and it's growing in spite of some of the negative news that came out. So there is growing use of stablecoins, and I think one of the most interesting things you can do with stablecoins today is actually lend them out on smart contract protocols where you can earn 10% or so, or to centralized kind of lending platforms as well. And that's, I think, something that could could help drive greater demand for stablecoins in the short run here, as people are looking for yield, looking to earn positive interest on their U.S. dollars.
Thank you very much. So we had two policymakers, we had two academics, but you were already bridging towards the practical side of, and now we're going to get into the real practical stuff. Samuel.
Hello? Testing? Yeah, so here comes the fun part. Right, so I would like to thank Greg McGrath for having us here. Right, for those of you who haven't heard of Binance, we are pretty much the largest cryptocurrency exchange in the world. We also happen to be history's fastest profitable unicorn. We achieved that in 6 months, right? In 2018, quarter one, we had profits that out-earned Deutsche Bank. Right? Deutsche had 146 million profits, we had 200 million in profits, right? So we trade pretty much all the largest stablecoins in the world. You name it, we have it, right? USDT, Tether, Paxos, USDC, right? We trade them, right? So we pretty much know what our users want, right? We have a very good gauge of the sentiments of the ground, right? Personally, for myself, I've launched 2 stablecoins in Binance, right? One backed by British pounds and the other backed by USD, right? And the USD coin, of course, is approved by NYDFS, right? I would like to share something pretty interesting, and that is we have an initiative called Venus, right? Venus is, you can call it our response to Libra, right? Libra, is a basket of currencies that tries to be, some sort of a global standard for currency, right? Whereas for Venus, what we are pitching and presenting, right, to governments, to central banks, to large corporates around the world, is that over at Binance, we have the expertise, we have the know-how of launching coins, cryptocurrencies, right? You name it, we can do it, right? So if you're a country who wants to launch your own sovereign cryptocurrency, well, we can handle the tech component for you. We can handle the product component for you, and we can handle the compliance component for you. So what do we become? In a way, we become a service provider, right? So in summary, Libra takes power away from, some of these governments. That's why they feel threatened. That's why they feel uneasy. Venus gives it back. Right? Thank you.
Thank you very much. Thank you very much. So, thanks. So, last speaker from the practical side, Stephen Becker.
Thank you very much. So just to take a few steps back, the first thing I'd like to say is that MakerDAO is a protocol that has been functioning for a year and a half on the Ethereum blockchain. And what it has done is produce the first fully functional, collateralized backed, decentralized digital cash. It's been running for a year and a half. So, very much like Binance has had their 2 stable coins, I can say that we came out way before them. Now, on that basis, on the one hand, when I talk about decentralization, I'm talking about the fact that no one person or one entity or one association or group of associations owns the protocol. And then, on the other hand, with respect to decentralization, there isn't a central party or counterparty risk. There isn't one point of failure. And that is effectively what makes the decentralized aspect of a stable coin so important. It inherits the characteristics of the blockchain. It inherits the characteristics that were imbued into Bitcoin and was imbued into Ethereum, and uses that to enhance the stability and the trustworthiness of this particular stablecoin, our stablecoin called DAI. Now, to that point, if you think about the stablecoins that Samuel just mentioned, Circle is on Binance, I think. Circle Coin, Tether, you've got TrueUSD, Libra. These are centralized stablecoins. There is a definitive ownership around them. You can call it decentralized, but if you want to call an association decentralized, that's great. The second part about this is that there is a single point of failure. Now, these are important contributions to the stablecoin space. They are fundamental, but at the same time, they are not the be-all and end-all. There is a broader spectrum of stablecoin application that needs to be considered because there is an inherent reason why there is a blockchain around in the first place. I don't need to remind everyone about what happened in 2007. We seem to be creating these products that are just effectively yet another financial product, yet another bank product. So that means we must have forgotten about what happened 10 years ago. Now, I'm not saying that this is something we should ignore, but it's certainly something we should keep in mind when considering a new system that works in conjunction with the current one. It's not enough to decide that we should be all a bunch of anarchists. Sure, that was quick. That was for him. I'm safe. Thank you very much. I thought the decentralized guy was getting the backhand over here. So the important part about this is to realize that we're in a space that needs to be created anew, but needs to be created anew with the tool set of regulation that is currently provided. There's a transition. It's important because this DeFi space, this decentralized finance space, otherwise known as transparent finance, is extraordinarily important for people in the world. We need to be able to know what we're using and how it's basically being used and operated. So to that end, there was a couple of comments that were made previously, the one about, and to a certain degree I agree with the comments, the more decentralized a stable coin is, the less confidence you have. Well, to a certain extent I agree with that because a decentralized coin has every single component of its risk exposed and transparent for everyone to assess. That means it looks kind of complicated. But imagine for a second if you could look through, I don't know, a bank and see how it operates. You would have a much better idea about how a fiat-backed stablecoin would operate, or maybe you would see how incredibly complicated it is. So the notion of a decentralized stablecoin is really something I'd like to introduce, or rather just reiterate, as a definitive alternative to what you think and what you've been hearing as representing stablecoins. Thank you.
Thank you very much, Stephen. I think this has shown that we have very different sort of visions on what a stablecoin can be and where the risks and where the opportunities and the benefits lie. So what I'd like to do now in a first round is to invite the reactions of everyone on the panel to the question, is the stablecoin that you have in mind, is this just a new form of money, like we had banknotes and then we had digital deposits in bank? And is it just another form of existing money? Or is it something totally different? So does it fit into the structure we have now with central banks and supervision and such like, and AML regulation and such like, or does it fit outside that? And are we looking to create something totally new, and are we creating a new world, as it were, for finance and for money? Is it revolution, or is it just evolution, that we're moving towards something, the next step in the evolution of money? So who has strong feelings on this? Let me just say that from my reading of the presentation on Libra earlier, my reading was that it was pretty well evolution. We want to fulfill all the regulatory requirements in the countries. We're going to be linked to a basket of 5 currencies. It's going to be totally mechanical. That will be totally backed by these 5 currencies. I would have asked, and those of you who don't know it yet, but the interest rate in Europe was reduced further an hour ago to minus 50 basis points. And you know, what do you do? And the long-term interest rate also, because the asset purchasing program is going to be reactivated. So the whole long-term interest rate schedule is going to be pushed further down. What do you do if you're Libra and you have all these wonderful negative interest rate assets on your balance sheet, and you have interest-free liabilities? You know, your business model is making a loss. But that is something I'm sure they're studying on. But that, I thought, was very much a business model that was trying to fit into the existing institutional structure. So let's try and get the minds clear. Are we thinking revolution, something totally different, no supervision, sort of libertarian view on stablecoins, or are we trying to fit something in that will ultimately work well within the existing international financial system? Who can I give the word? Tommaso. And then.
No, I think it's very much an evolution. In fact, I think that in terms of defining the stablecoin, it's as much as possible an evolution. Give me your euro bill, here is a tokenized version of that bill that you can spend more easily in a digital world. But it's as much as possible backed by that bill so that you trust it. Now, of course, if the stablecoin, the impact could be somewhat more destabilizing. If that bill is if the stablecoin is backed by the bill and no longer a bank deposit, you could imagine funding moving away from banks. Or, as Daniel was saying, the stablecoin, which is now on the blockchain, could allow for payments of assets that are on the blockchain. So the implications could be interesting and could have significant impact, but I think the stablecoin in itself is as evolutionary as possible by design.
Yes, I also think it's an evolution. And, I mean, I would start with the notion of the power of sovereign money, like the money that is backed by a sovereign state, and it's not just by a central bank, but it's a number of laws and a status of legal tender. That's a very strong anchor, I think, for what we use as unit of account. Right? And then the next question is, how do we use money? What forms of money do we use? And that are derived from that. Tommaso was alluding to the banking system that also creates money, but there are backstops in terms of deposit insurance, emergency liquidity assistance, and so on. So that's our framework today. And I think somewhere in this system it will stay. Just a brief anecdote from history. Like, we used to have stable coins in the form of banknotes that were issued by national banks in the United States. The Fed was already created, but there were banknotes issued by private sector banks. That said $1 issued by bank X and Y. Why was it credible? Why were these notes accepted? Even though the issuer was a commercial bank, it was credible because they had to deposit sovereign bonds plus a haircut at the Fed for every banknote they were issuing. That's a stable arrangement. And now in the digital age, that's exactly what would be needed too.
Daniel, you suggested that this was an old anecdote from history, but I can tell you the oldest stable coin was from the Amsterdam Exchange Bank in 1609, which issued bonds that were fully backed by gold that was in the Dam Square in Amsterdam, and these bonds were traded in Hamburg and in Belgium and in northern France. And it was the first central bank, but it didn't provide credit yet. So we, among central bankers, we think the Riksbank is the oldest central bank because it provided the first credit. But the oldest real central bank in this sense, with a stable coin, was the Exchange Bank of Amsterdam from 1609. But let me just see whether the academicians, and certainly you, Steve, whether you think that it does fit into the current framework, or whether you think it's outside it, whether we're thinking too much within the orthodox structures.
Shall I continue?
Please.
Okay, so yes, there is a little bit of unorthodox thinking here, but there's a simple premise, or rather a simple function of money that keeps on being overlooked. Everyone talks about store of value, medium of exchange, unit of account. That's wonderful. But the one thing that's missing and is really important to being a widely accepted form of payment is when your money functions as a standard of deferred payment. That is essential. That is the most pragmatic form of being widely accepted. And that's one thing no one really has been paying attention to, because if Bitcoin could be used to pay your taxes, everything will be priced in Bitcoin tomorrow. And the idea
isn't that the
here,
same as the store of value? I'm just trying to understand what the difference is between the store of value,
right,
where you can keep it to pay your taxes,
correct,
and your deferred.
So if you have a look at the generally accepted idea of the characteristics of money, they go from what? Durability, portability, and divisibility. And then from the blockchain, you can get fungibility and value. And the last thing that's missing is being widely accepted. Now, in order for something to be widely accepted, it has to be seen as a unit of account. So how do you get something adopted as a unit of account? Well, it's the easiest thing in the world. Say, well, you have to pay your taxes in it. And immediately you're going to have that thing adopted. So, you spoke about the oldest stablecoin being bonds being backed by gold. But do you think back in the day they could have paid their taxes in bonds? So this is what I'm trying to get at, is that effectively it's really just money. But at the end of the day, when we have a look at something like Bitcoin, and we say, oh, it's extraordinarily volatile, I'm not a Bitcoin maximalist, but I can tell you that the premise of the Bitcoin maximalist is that Bitcoin will eventually become widely accepted. My question is, how is that going to happen? And their answer is, well, by circa 2150, when it hits the 21 million limit, it should be accepted. I don't buy that argument, but I get what they're trying to say, and that's the acceptance of it. You find any stable coin that becomes broadly accepted for fundamentally anything from transactions to concluding a standard deferred payment, you've got yourself a possibility there. And that's where MakerDAO is essential, because MakerDAO has built in a standard of deferred payment.
That's interesting. When I listened carefully to Bruno Le Maire this morning, he was clearly saying that he did not want Libra to be accepted in Europe, and of course then you might have some friction between what legislators and governments want and what is offered. But let me just see to the left. Yeah, please.
I just wanted to come in on the Bitcoin comment also and defend, I think, the more radical nature of some of the stable coins like make or die. I think it is pretty revolutionary, actually, what you can do from a programmability standpoint, the types of assets that are backing it, and so on and so forth. But Bitcoin is worth, I think, bringing into this discussion because, Hayek, of course, with his denationalization of money, arguing we need to return to, currency competition, kind of anticipated the world we're in today with that pamphlet in the late 1970s. But he argued that, of course, the denationalized currency that would win would be the one that would be most stable. And I think a lot of Bitcoiners would disagree with that because they would think that, look, would I rather own a currency that is going to be stable or something that's doing this? Even if it's bouncing around, it's going up. And some people actually think Bitcoin might become stable at some point, achieve some kind of equilibrium. I don't know how that happens personally, but Bitcoin, in some people's minds, will become a stable coin eventually.
We have some countries in the world where we have deflation, which in a way the purchasing power of the currency is increasing, where you hold the currency in your wallet, which I'm sure the central bankers are not very happy about because they want people to spend it rather than keeping all this money in their wallets. But do you have some views on this?
Yes, actually I think that whether it's evolution or revolution doesn't depend so much on the technology, but on how it is going to be used by people. Because if, for example, we heard the argument from the representative of Libra, well, no one is going to use Libra as a store of value in unit of account. People are only going to switch very, very quickly to Libra, maybe for a millisecond, transfer money, and then switch back to their own currency. If it is going to be used like this, then it is an evolution. It provides a payment infrastructure, and there are absolutely no risks then for the financial systems. However, if it is going to be used as a store of value and eventually as a unit of account, then it is going to be a revolution. And we have heard also in one of the sessions, previous sessions about central bank digital currencies, that if people move their money to central bank digital currencies, then we have a problem because of banks are going to lose their funding. They cannot lend anymore, so the central bank will have to fulfill the function of lending. Well, if people start using their money, not in France, not in the UK, but I don't know, in emerging economies, if people start storing their values in Libra, then banks will not have money also to lend. So I think it depends really on the usage. But I think there's a bigger thing here as well, especially when it comes to Libra. It's a payment infrastructure. And payment infrastructures are characterized by network effects and by winner takes it all. So we might move, so in a way we are moving, we already see many, many examples of big tech companies entering the financial sector. So on the one hand we have decentralization and somehow the quest for decentralization, but on the other hand we have big tech companies moving into financial sector. And I'm thinking sometimes, imagine there is no financial sector today which exists. Who could be the best to fulfill its role? How do we imagine a new financial sector? Do we imagine Bitcoin? Do we imagine decentralized? I think if we imagine tomorrow there are no banks, no money market mutual funds, well, it's big tech companies who are going to fulfill this role because they have two advantages. They have lots of data, and the role of financial sector is to mitigate informational asymmetries, and they have network effects, and it is essential for payment infrastructure.
The one thing I'd argue is how many retailers do you know provide financial services as well? Walmart, Best Buy, I can go on. Pretty much the merging of finance into pretty much every other sector is happening. And now we're looking at the tech sector, and let's be honest here, we're not really worried about the tech sector, we're worried about a specific name that has lost our trust. And that is really the fundamental case. If you took that name out of the pot and just look at technology, you'd go, well, that's fine. Go ahead.
What do you think, Samuel?
To be honest, whether it's an evolution or revolution, I don't really care. Right? I think at the end of the day, my job is not to create the perfect or the ideal stablecoin or cryptocurrency. Right? My job is to facilitate the movement of that cryptocurrency. Right? So what is going to work, from what we see from our angle, what is going to work is something that is easy to work, easy to use. Right? A really good example is China. Right? In China, nobody uses cash. If you use cash, they think you have issues. Right? So everybody uses Alipay, WePay, right? Because it is that convenient to use it, right? So I think, you know, we will get there, right? We will get there in the future where, you know, there might be a digital form of money which is so convenient for everybody to use. It has all the qualities that you guys mentioned, right? Who knows, right? But until we get there, I guess it is to keep trying. It is still an experimental stage at this point.
Right, maybe I could just add two thoughts on what it is and what we want to achieve. One of the senses I get with some of the proposals on stablecoins, and particularly those that are not linked to one currency but linked to a basket or linked to a lot of other things, is what we had with Esperanto 20 years ago. We said, all right, let's introduce a language and everyone learns this language as a second language, then we can all talk to each other, and you know, that's wonderful, and we'll have our own language and Esperanto. And it never really worked. And why? Because you want the language to be useful also somewhere in the first, as the primary source of a language. And in this sense, also Libra, I have a sense, you introduce Libra, which is a basket of 5 other currencies or more, and everyone who uses it is going to be susceptible to exchange rate risk, so you're going to get internationally, you're going to get an international financial system with more exchange rate risk, and you know, more risks of mismatches and of things going wrong. And this is my main concern with all the, so I do have a public sector concern with all these initiatives. I feel money is extremely important for trust in society. And once you undermine money, you really undermine consumer spending, you undermine resource allocation, you jack up savings in your economy, all sorts of things go wrong. So you have to be very careful. And that's my point with stablecoins. A stablecoin is only really sustainable if it's really stable. And when do you get it stable? That is when the assets and the composition and duration and risks of the assets are totally mirrored in the liabilities, so in the money they issued. And as soon as there's a mismatch there, you get a tail risk, and you can get run on this, or you can get a source of instability, and it may not rear up its ugly head until once every 40 years. And that's too often. You want it to be foolproof, so you want it to work under all circumstances. And if I look at Libra, I see, as I mentioned just now, a loss-making business model, and I see lots of mismatches, which at the end of the day, there will be a time when it goes wrong. And it's like airplane people, the people doing the radars, they rule out 1 in 100,000 risks because you have 100,000 flights every year, so you have to rule them out. And it's the same with stable coins that are going to have a global presence. You want to rule out even the 1 in a million risks that it goes wrong, because it will go wrong. But that's my perspective. Daniel.
Can I add something to this? I'm not challenging what you said, but I think an important dimension that we don't talk a lot about is interoperability of stablecoins. Right? And I will be a little bit philosophical now, but I think the human brain is pretty simple in the sense that we can maybe deal with 2 currencies, maybe with 3 currencies. And I think that's one of the issues of all the crypto assets. You know, we cannot deal with 1,000 crypto assets, prices denominated, food denominated in different currencies. So with stable coins, they're basically stable, we think, right? They're all 1-to-1 with the dollar, but they're not the same because Libra, and Libra's not a stable coin, but one stable coin will have users in the US, right? The other one will have users in Europe, maybe for corporates. It's not the same asset that you trade, even though on surface it's the same. I don't want to have, say, a JP Morgan coin because I have no use for that.
All right.
Right? Even though it's 1-to-1.
Yeah.
And I think there will not be a lot of stable coins ultimately, exactly, even on top of all the reasons that you mentioned.
Okay, Daniel, thanks very much. I'm looking at the time. We have to move now to the second leg of this debate. We have about 15 minutes left. I want to ask the panel. So maybe we're making the step over to the risks. but we also want to emphasize the benefits, because there are issues about inefficiency in cross-border payments. There are issues on financial inclusion. So how can we design the stablecoins in a way that makes them more useful to users, to mankind? So who can I give the floor? More on the on the technique. Samuel, I'm sure you have some thoughts to share with us on how to make this better.
Do I really have to go first?
Yes, no, well, you don't have to, but I mean, yes, please. I'm sure you'll enlighten us. Or, yeah, use your own.
Sorry, if you could repeat again.
Well, so I'm thinking, you know, there's a lot of concern about, there's a lot of benefits out there, clearly, and that's why it's receiving so much attention. There's some concern about the risks. Now, we have to mitigate the risks, and we have to come up with a design that tackles the risks and that at the same time secures the benefits. How do we do this? So I'm looking more at the technique. How do we do it? Or what do we demand of Libra? What conditions do we set? What does public policy do?
Well, I think at least at the technology level, we already have existing technology like this, right? So DEX, decentralized exchanges, right? So this is an avenue where you can transfer, right, your stable coins or any sort of digital assets across borders, right, without any sort of restriction. Right? But you know, for anything to be successful, for anything to not be shut down by the government, you need to work with the government. Right? So if there are any sort of regulations or local rules in place, you need to integrate that into your technology. Right? I guess the biggest concern in the industry now would be FATF's travel rule. Right? Some of you might be accustomed to it. Right? So I think it's about really finding that balance, right, where you have both the technology and the capability to integrate the requirements as needed by regulators. And a very good example I can give you is, you know, exchanges, they do their own KYC, right? They use tools like chain analysis, they can track the transactions, right? So they know the beneficiary, right? They know where the transaction is going, right? And they can identify the user. So in a way that mitigates the AML sort of risk, AML CFT risk that they're talking about.
Garrick.
I can add a little bit to this. So Paxos, which blockchain supports in our wallet, has in its smart contract a law enforcement function that can be called to freeze balances, to zero out.
Kill switch.
Yeah, it's a centralized kill switch in essence. If a Pax, goes through a sanctioned country, an authority can contact the Paxos organization and they can, execute this function to freeze or zero out the balance, right? So that's a feature that's built in, a safeguard, and I would expect potentially Libra to have something like that as well. I think having currency on a blockchain is really powerful, and also enhances the safety and in many ways the credibility, and improves on money. And that's already here. We're expressing ideas in code in a transparent way that can be audited by anyone. That's really exciting to me. Central banks sometimes make mistakes. There's things that happen behind closed doors that people would love to know more about. Sometimes people like Bill Dudley, former head of the New York Fed, come out and suggest that central banks should try to influence U.S. political elections. What kind of conversations are going on? This code is out there, on the internet. It can be audited. That's, I think, a nice improvement. The holy grail, of course, is the algorithmic central bank. I'm not sure this is possible, but anyone who wants to try to win a Nobel in economics and pulls this off, if you can design a pure algorithm to manage the supply of currency with the needs of the economy, kind of like, sort of like Milton Friedman's idea of just replacing central banks with a computer, but that would be a really incredible accomplishment, the driverless central bank, if you will. Maybe that's, for some of the young people here to work on for the next 20, 30 years.
Thank you. I'm getting worried about my job here. All right. So, any thoughts from your side on the question how of stablecoins?
How to structure?
Yeah, and how to
stablecoin?
make it better, how to make it consistent with what we're trying to achieve.
Okay, well, the first thing that I'm going to try and keep this quite brief because you did say we have only 15 minutes, but essentially what you need to first structure in your mind is whether you want to create something that is based in the traditional system or is a transition away. Because money, for all intents and purposes, as we have discussed, has this timeline where it was initially backed by gold, then it was credit, then it's fiat. Now, the whole idea is that, and I think Olena brought this up maybe a bit earlier today, like, why are we doing this all over again on the blockchain? And the whole idea here is we're doing it all over again because we're not confined by jurisdictions, which also brings in a problem about regulation, which also brings in a problem about monetary policy. But essentially what it does, it gives us an opportunity to address these things again and say to ourselves, well, if we had to do it over, what would we do now? How would we go about it to make sure that we can have a currency that is effective and is accessible to everyone around the world and gives everyone an opportunity? So how to make a stable coin? You make it accessible. How do you make it accessible? You make it decentralized. Otherwise, what you've got is, as I said, yet another bank product. What was said earlier about Libra being accessible, well, Libra is a white paper. MakerDAO's DAI is functional right now. If you want, I could tell everyone to go to a specific website and I could transfer 2 cents of DAI to you right now. And the premise of that is extraordinarily important and extraordinarily powerful. And that is why a decentralized, transparent, functioning stablecoin is essential to adoption and to literally creating an economy on the blockchain that dovetails with the traditional one.
Thank you. Tommaso.
Thank you. You were asking about risks and benefits. I think there are lots of risks. Some can be tackled, I think, more easily than others. So to the extent that even some risks can be transformed into benefits. We were talking earlier about financial integrity, AML, CFT compliance, that's definitely a risk. But to the extent that anonymous transactions can be outlawed, the technology could actually help in monitoring transactions. That risk could actually become a benefit. There are other risks that will remain, but of course can be addressed more or less with existing means. Consumer protection, of course, is a risk. We talked earlier about the possibility to lose money if the assets that back the coins make losses. But then you ask for these issuers to hold sufficient capital, sufficiently safe and liquid assets, etc. You can get at that somehow. Financial stability risks we spoke about, the disintermediation of banks, deposits coming out of banks into the coins. Well, perhaps I'm a little less concerned because I know that banks can fight back. They can offer higher interest rates on deposits. They can offer better services themselves, and why not tokenize the deposits so as to offer means of payments that are equally attractive as stable coins. I am more worried about two risks, and that is market contestability and loss of monetary policy control. Market contestability, of course, the monopoly power that can come to, that stablecoin issuers can have, comes from two things. One is access to data, and two is the very strong network effects. I think you can tackle data to some extent and make sure that data is portable. But it's going to be harder to make these stable coins interoperable and to fight against the network effects. So a very, very large social media platform that issues stable coins could very easily have a monopoly and could be very difficult to tackle that issue for policymakers. The other issue that I'm a little concerned about is loss of monetary policy control. And specifically what I have in mind is currency substitution. In countries with very high inflation or volatile exchange rates, etc., residents typically try to hold a foreign currency. We call that dollarization. What we could see with stablecoins is a much easier access to the foreign currency, to the stablecoin, essentially. So instead of holding dollar bills under your mattress, or perhaps even in a bank account, you could hold dollars through a stablecoin, making it much easier for these countries to dollarize. In those cases, the central bank loses its ability to influence the economy, even more so than before, loses the ability to provide liquidity to the financial system, that is a serious issue to many of the countries in the IMF's constituency, for sure. And it's a risk that I think it will also be difficult to tackle. So those are the risks that I think policymakers should really focus on right now.
Daniel.
Yes, you ask about the benefits, right? I think some disintermediation of banks would be good for financial stability. And I want to explain why, I think. If you look at the international financial system, what happens that if you want to do international transactions, you have to rely on a correspondent bank. So the correspondent bank gives you a credit during the day to make payments, to buy things, and so on. So that's a risk for your correspondent bank. Then overnight, you hold a deposit with the correspondent bank. That's now a risk for me, because I have money with the correspondent bank. And if we look at the financial crisis, what happened is these two didn't trust each other anymore, right? So the correspondent bank would not provide intraday credit to the client, and the client would not want to leave money at the correspondent bank. And here I think if we had a credible, truly credible stable coin where that you could use overnight, that you could use to make payments, to do settlements, this would be good for financial stability.
Olena.
So the question was, how do we design the best stablecoin? But my question would be rather, who is going to have a say in this? Is it some computer scientists who are going to do it? Are we going to have some community of users who are going to vote? And it's very, very interesting in many cryptocurrencies, but also in DAOs. It's the users who could influence the design of the stablecoin in the future. And today in the morning, Bruno Le Maire said we are not going to allow Libra here in France. I'm wondering, will policymakers have a say? Or are we afraid of regulatory arbitrage, whereas stablecoins will just go to some jurisdictions which are more lenient to them? And what will stop me from buying Libra in Switzerland?
I think he said in Europe, actually. And then he said he'd do it together with the Germans and with his European partners. He was going to organize it. I listened very carefully to how he spun this. So, all right. I think what I'd like to do just to wrap up now is to ask each of the panelists to give in 30 seconds their main message to the audience on stablecoins, the design, the purpose, the mission of stablecoins, in order to make this as useful as possible to mankind. All right, can I start right at the left? Is that okay, or yes, please?
I mean, revolution, evolution. Stablecoins are evolving. The space is evolving. The whole crypto assets space is evolving. Things are going to continue to evolve. We don't know necessarily where it should evolve to and how it's going to evolve. Anyone who claims they know the answer to that is, I think, misleading you. There's a non-zero chance that Libra never launches. It could launch in a very different form. India has already been written off as a market, the largest market for WhatsApp users. I guess my main message to close would be, I think we worry a lot about risks, but we need to also think about the opportunities, the chance to drive competition, reduce fees, to be able to move money across borders faster than we can today. I mean, I can get on a plane with cash and get it more quickly to Beijing than I can by wiring the funds. That's ridiculous. Money should be free to send, fast, instantaneous, like email. And that's the world we're heading to. And the sooner we get there, the better.
Olena.
30 seconds. I think we have to know what we want from our money. And I think, yes, we want fast payments, but we also maybe want privacy. And I'm thinking, okay, I was born in Soviet Union, and so I think it influences a lot how I think. And I'm imagining also some dictatorships in the future, and we want maybe to have cash to contribute to fight against those dictatorships, or maybe Bitcoin. And so as we are moving to stable coins, to more or less we are going off cash, I think we have to think as a society what we expect from our money. And to create money, it's not only a question of technology. And I think I have been insisting on this many, many times. But it's also a question of how we as a society want it. And many questions I have raised about monetary policy, it's not a question of technology, it's a question about economics. Yeah. Thank you.
Well, I think the war has started, and we can either sit here and debate, or we can get up and act. And if you want to get up and act, you can find us.
Tommaso.
Right. I think that stable coins are very healthy. If anything, to force us to have this debate and to think about how we can fix the payment system, how we can improve the payment system. What is interesting to me is what will happen once the payment system will be fixed. Stablecoins might have already spread, and will they persist once the payment system has been fixed? Will they become the banks of the future, and in which case we go back to more or less where we are now? Once stablecoins have a large user base, will they decide that, well, intermediating credit is lucrative, and why not apply for a banking license? And they will simply be the banks of tomorrow. I think the question is not so much what happens today, but what happens when we fix the payment system and how we do that.
Stephen.
Yes, thank you very much. So, in short order, I think the easiest thing to chew on is consider how you would regulate Bitcoin. That's it. I think the person who can figure that one out will get the Nobel Prize. Not the guy that can figure out the algorithmic central bank. There was a bunch that tried, that didn't work out. But essentially, think about regulating Bitcoin. Who was the gentleman that said that Libra is not coming to Europe?
The French finance minister.
The French finance minister. And do you think that they can stop Bitcoin? So the point here I'm trying to make is you've got to start altering your thinking and start saying, well, if it's a protocol, it's like the ocean, stop regulating the ocean. Try and just regulate what you're going to use on it. Because if you can create walled gardens, if you can create goods and services that have regulation baked into it, you solve that simple notion of how do you bring Bitcoin as a functioning value add and stable coins into the real world.
Thank you very much, Stephen. Daniel.
30 seconds. So I think the current centralized financial system is risky. We had a global financial crisis. It produces services that are expensive. Payments is one example. There are others. If you want to move a security from one country in Europe to another country, this is slow. It's costly too. And here I think that technology will help to bring these costs down. It will also decentralize risks, and stablecoin will hopefully play a role in that, given that we design the right, truly stable coins.
Thank you very much, Daniel. My task as moderator was also to check the time, and we're exactly on time, so thank you all very much for this. Let me just conclude with my conviction, my 30 seconds of conviction at the end. Let me just say, I'm sure we're going to get much cheaper, much more cost-effective cross-border payments. We'll get instant payments in Europe. I'm sure we'll get much more financial inclusion as well. How we'll get there exactly, I don't know, but we need everyone to help us achieve that. So thank you very much. Thank you to the panelists, and see you again next year or next time. Thank you.
Sorry.
just had my 4 days of Basel.